Turnaround Tuesday, Warriors. How's everyone doing? Yasser, Tony, Tom, everyone doing okay? Okay, so we talked about EG yesterday, and it was approaching a target that I've bandied about for a while up here at this 88 level on the weekly. That's where the 200 comes in. So I see a 3 drive here. 1, 2, 3. Not saying it can't push again. Sometimes on the 3rd you could have 3. I think there's a possibility this is just counter trend, of course, because, very directional move here. I have not done the fibs. I don't know what these fibs are from, but I'm thinking it's, everyone would like to buy it back at the breakout, but maybe we just got to break to 87 in the meantime. So that's one candidate that I'm looking at. This one so far isn't working out. I'm trying a 3 drive in gold, but looks like it may even want to throw over here. We'll see. Pretty weak. Copper looks better. I thought we might get a 3 in copper. Bought it Sunday evening, got stopped out. I'm not back in yet. I'll see if we get a 3. Something I want to talk about just briefly is yesterday when the S&Ps were getting hammered. Brought it up to Steve, and S&Ps were down 20 handles or so, and I said, look how well the yen is holding up, and I think it was in here, and we're now surpassing the 38%. So next target's 1071. I guess the grand prize would be filling the gap from the trade news a week ago. That would be 61.8 at 111. Also, that's what Saeed was looking for last week, trader 1SC, when he was live last week. So that's in gear. So I don't know if it's a flag anymore. It looked like a flag. Some people were saying it was a flag, but I'm just viewing this as a counter trend. This is going to be, I'm looking to get short. You had some small longs covered yesterday. Some people still long, but I think the trend in a shorting opportunity will set up, and that's because this bounce in yields isn't really that powerful, but it's enough for the yen to sustain this correction. So now yield, something I talked about as well, could eat into this gap if we filled at 248. Oh, that's another 5 points. So both US dollar yen and yields heading up together, and I believe they're both counter trend for at least another break to new lows. As you can see on the daily on yields, we didn't quite take out this low. I think there's destiny for it to do so. And once we do, this is a big moving average on the weekly. Maybe it won't even stop at 220. But there are probably some people calling this a double bottom. And I'll agree with them if we get a 2-week reversal. And that would be a close in yields back over 247 by Friday. It's pretty early in the week, and that's still 14 basis points from where we're at right now. And that would fill the gap. So just a 2-week off number system. Looking at the Dixie, maybe we're going to try. We're not that far away from new recovery highs here, right? Greg nailed it. I mean, Greg, here's the old high right here, 98.40. Seems like it's running out a little juice right now. Okay, and cable's acting a little better. Greg looking for 98.80. I really don't know what to do with the dollar right here. I would love to see the dollar make a new high and get to Greg's target. And this, which led the way with dollar strength all the way. Remember how everyone kept talking about, wow, look at the Swiss, and it was a straight line, powerful move in the Swiss. So if the Dixie could take out 99.40 and trade to 80, and we put in a lower high in US dollar Swiss, that would be a market message to me that the dollar rally might be close to terminating, And I would go with short Swiss with the Dixie making a new high without the Swiss, which would be really the opposite of what was going on here. The Swiss was making new highs and leading the dollar to new highs. So if the dollar could go to new highs and Swiss is lagging, that's a pretty, I think, important message to pay attention to. Anyone out there agree with that? So, it's very important to identify the relative strength, relative weakness, to give you your preferred. There's GBP news right now, Martin. It's important to identify the relative strength, relative weakness, so that you can identify your short. So if you're short the relative weakness and your timing isn't perfect, it's going to be more forgiving than if you're shorting the relative strength. Everyone understand that? You don't have to be as perfect if you've identified. So everything is trade selection. I use, I think American Idol and all these singing competitions are coming down to the finales, but for a singer, it's song choice. For traders, it's trade selection. So real important to identify relative strength, relative weakness. And if EG is going to work and EG is going to correct, that means the pound's going to hold up better than euro on declines and outperform on the upside, which is what's happening right now. Okay, so I'm bullish long term on EG. I think we're just completing one of the first moves here. So here we are. We'll see what kind of follow through we get from here. And we have a great guest today, Carl Snyder. Looking forward to talking to Carl. Hope everyone enjoyed the interview yesterday. It really blew up Twitter. Everyone commenting on it. You don't have to agree. It's just one of my rules with guests is you don't have to agree with them. All you have to do is show respect, and you don't have to text everything you think. So hoping everyone has a great turnaround Tuesday today. And we're getting an alert on Canada right here that cleared my left ear up a little bit. And with that all being said, who's joining today that's not a member? Anyone out there? I really don't think I have to pitch it. I think everyone who's been at FACE for more than a week knows the team, what the team has to offer. Just a matter of whether you want to invest in yourself and your future in trading. And, you're talking about 10, 15 pips a month. People risk that every day. You're a guest here today, Todd. Nice to meet you. Recommend you at least risk $1. I know you're risking 10 times that every time you click your mouse, maybe 100 times, maybe 1,000 times. And check out the team. It's one of the best in the industry. I actually think the best. So Todd, Blake Morrow, his reputation, I really don't have to go over much. Grega, don't have to go over much. Pretty well-known guys. Stelios, one of the best fundamental guys. You'll hear his views on what's happening. Martin's talking about GBP news, so I'm sure Stel's going to fill us in. And Steve, every day if you're here, he puts a whole jigsaw puzzle together for you every day on FACE by answering your questions and going over his stuff. There's a host, Dale Pinkert. Joe Perry, who's our representative on a lot of major media like Bloomberg and Real Vision. Paulie Franco, who does a European crossover and also doing a new show to get people going after the U.S. markets close. And Paul's going to be keeping you up to date with a lot of its pivots on in the afternoons. Amanda, people in private member chat, she shares her trades live. She trades for a living, and that's how she takes care of herself and her family. It's not a hobby. Andre's harmonic work is elite and beautiful to boot, like Picasso. So here's the team. Do you? Okay. Yeah. So then maybe Gelos Capital. Blake trades for them. So Todd, you look like a pro. I'd skip the trial and go for a quarter because it's my view that you really can't judge anything. A money manager, signal service, an educator, whatever it is. 90 days to me is a minimum period before you assess and make a judgment about it. So that's a wrap. If you're overseas and you're not getting any rebates, or if you're in the US and you're not getting any rebates, you should. Here are the guys to contact our sponsors, Trent and Justin. So they're a broker of brokers, and you could always have more than one account. So overseas, you could use the rebate to pay for your subscription. It's not allowed in the US, so you just get a check. And overseas, you could go for the check too. These guys will help you. So that's what I see for today. Those are my calls. The next one's yours, 800-899-BEAR. Just kidding. It's an old 800 number of mine. What's up, Blake?
Hey, good morning.
Do you like that? 800-899-BEAR?
Those
are my calls.
The next one's yours. Not today.
Really? Why?
No, we're getting a nice lift in risk.
Oh, yeah.
I'll take over here.
What do you think of the yen here, Blake?
I was just, I got hit on a pound yen long overnight. I got hit at 120, or 139.78. That's actually 77 and some tenths of a pip. Anyway, I got hit on a bid. If you guys read the blog, let's go over to, this is free too. It's every night I try to post a chart of the day. Last night was the pound yen, and you can read the analysis here. Here's the chart from last night. Inside day, a lot of fib confluence down here. So I put in a bid about 40 pips below the market, got hit overnight, and I told everybody this morning, I'm like, look, I got tripped into a long overnight, and Prime Minister May, the news that Martin's talking about is she's gonna put forth her new Brexit plan this morning. Pounds start ripping, and as you can see, we're at highs not only in the pound yen but also in the pound dollar. Now I took my pound yen off the table already, but early this morning, also in the chat room, I shorted the euro pound. So here, you guys in the chat can say hello. This is the chat room here. Let's go back to earlier this morning. I'll do it for you guys here in a bit. See this morning. Good morning. This is this is showing the Aussie yen inverted head and shoulder pattern that I posted earlier. Let's see. Right here, this is 3:45 in the morning. Oops, that's probably about when I was getting up here. Good morning, guys. Yeah, I got hit on a small pound yen overnight, long at 139.77, and then we were talking about Polly's pink eye, and then talking about the Aussie yen. I picked up some Aussie yen long down here, which I did about 15 pips ago, which I'm long. And then if you can go back to where we're at now, but I already closed out of the position. I told everybody. Then here's everybody in the chat room. You guys can say hi. Simon says, so you need to be in here. Nice. There's everybody saying hi. So you guys are on Jumbotron. You can see there's about I don't know, 105 people in here. 104. We're in, this is where I spend my day, and so does everybody in here. I spend more time in here than I do with my damn family. So anyway, I'm going to go ahead and take you guys off, put you back up where you're at. Anyway, the cable was pretty oversold. You can see here's the 4-hour chart, and I updated the ForexAnalytix charts as well. 161% extension, a lot of support, divergent relative strength. I expected the pound to bounce, from at current levels, which we are doing. Hold on, let me take this. I just shorted dollar Canadian like 2 pips ago. I'm just going to take it off so I don't have to deal with it. But you can see the dollar Canadian just broke through this this support. Now I think the dollar Canadian, this is going to be really important support as we approach this 133.85. One of the things that that you got to keep in mind about the Canadian, especially if risk appetite continues to improve like it is right now, U.S. Canadian Mexican negotiations are going well. We're going to be raising the tariffs or taking the tariffs off some of these steel companies, which is going to help the Canadian dollar ultimately. So as long as risk appetite can continue to improve, the dollar Canadian should continue to slump. Like I said, I took it off just because I don't want to deal with it as I'm speaking here this morning for the next 20-30 minutes. But I do think the dollar Canadian could continue to come off and sell off here. I already took my pound exposure off, but you were talking about the euro pound, coach, and the reason why I shortened the euro pound, we're at the 50% retracement. You can see relative strength, see how it's divergent, see how it's rolling over. If you go over to ForexAnalytix, let me take you over to the euro pound chart, basic technical analysis that I updated earlier about 45 minutes ago, 4-hour chart. The euro pound is hugging the 50% retracement. Just above is the 161% extension at 8,800, which may offer some resistance as the RSI is divergent on the 4-hour. RSI is divergent. We're up at the 50%. And then, the euro pound obviously has come off now. We sold off about 15, 20 pips. I actually think that you sell rallies here. I think this is a sell rally type of situation with, keeping stops above 88 pence, because this is the 161% extension. Even if we do this, we do that, I still expect us to move lower after that. And from here, since I already took money out of the euro pound, what I'm hoping for is one more stab higher. That's what my hopes are for today. I hope we take out the highs, just one last stab higher, and I'm gonna take a little bit larger position at 88 pence now that I've got some profits to work with, because I've already taken so many profits off the table this morning on the pound yen and the euro pound. I don't mind now taking another stab at it if we take a move a little bit higher. But that's what I'm trading today. Now you have to realize at this point in time, the cable does have a lot of this bad news priced into it already. Stelios isn't here this morning. He's usually updating us on what's happening with the cable. I believe he's still on a boat. He's been sailing around the Aegean Sea for the last few days now. If you don't know that Steve, who will be here shortly, and Stelios both live in the Athens, Greece area. I think Stelios is on a permanent vacation. Would you agree with that, Steve? Like kind of permanently? I know he trades from home and stuff, but the guy's like always on vacation. So I think he's on a permanent vacation. He takes a couple of days off to make sure his girls get to school. So other than that, isn't it true? It's like the guy's always on vacation. He's always like on some island.
We should get rid of him.
Yeah, seriously, like the guy doesn't work. But no, all jokes aside, I mean, you could live in. I've been to Greece twice. I got married in Greece. For those of you that do not know, I got married in Greece in 2003. My wife is half Greek, so I'm actually baptized Greek Orthodox, so I'm one of the
Lucky
only.
you.
I'm one of the only. I think I'm one of the only half Chinese, half Greek Orthodox people around. I don't know if you're going to meet too many of those around. Anyway, uh, um, uh, Greece is one of those places that, well, being as beautiful as it is, but you can really spend your entire life going to different islands around the Cycladic Islands, but all around Greece, and you'll never visit them all, will you, Steve?
That's absolutely right.
It's nuts. It's awesome though. It's really my favorite place, aside from some places in the United States. My favorite place outside of the United States for me is Greece. It's just such a beautiful country. But anyway, I get the reason why Stelios is out traveling around all the time. But going back to the euro pound, and Steve, I'll bring him back in here in just in a second.
Absolutely, mate.
So the euro pound's up against resistance. I think this is a good place to be on the sell side. Unfortunately, I've already taken profit, so now I'm just hoping for another move higher. But this cable is looking pretty oversold. You know, we had a completed head and shoulder pattern. RSI was very divergent. Now at this point, you know, if you're a cable bear, you know, you hope for a move back up to 128.50 to look to sell it up there. I think if you're trying to short the cable down here, it's a dangerous game. I'm not saying you can't make money. I just think it's dangerous trying to be on the short side down here. Personally, I'd rather be on the long side. Personally, I'd rather, you know I'm out now, but I'd rather take one more stab down at this 161% extension than get long again. If I'm going to play it on the long side, the only way I'm going to do it right now is down here, or if you break back above this 127.70, then you're going to get a squeeze. Like this is the breakdown point. You can see this. Let me draw this out for you. So that's the breakdown point. You can see that's the breakdown point. So if you get above here, it should be a natural, just technical squeeze, which could last maybe, you know, I would try to, I mean, I'm going to try to, if we get up there, I'm going to try to squeeze 30, 40 pips out of this. I think you could probably make more than that, but you know, I always come from the old adage over the last 20, you know, almost 25 years of trading is bulls and bears make money, pigs get slaughtered. I'm not going to try to, you know, squeeze every little pip out of this move. If I can just get some Momo squeeze through here for 30, 40, 50 pips, that's fine by me. I don't need to make, you know, exactly from 70 to 70 and make 100 pips here. If I can squeeze 30, 40, 50 out of it, it's fine. But I think that a squeeze is brewing here. Anybody who's on the short side's got to start being a little careful, because like I said, a squeeze above 127.70 is going to bring a little bit of upside momentum. Remember, there's a lot priced in. Everybody knows that Prime Minister May is on the way out. Everybody knows that, you know, heck, Boris Johnson could be the next prime minister, right? Isn't that scary for some of you guys in the UK? But you know, a lot of the bad news is out. So I guess it just depends who you support and what you support. So I don't want to get into politics here, but what I'm saying is that a lot of this is already known. So now that everybody's already, you know, in the know, that, you know, is a recipe for a little bit of a reversal. Now there's obviously a lot more happening today in other currencies, especially regarding like the Aussie dollar. I want to focus on the Aussie, how we slumped after the RBA meeting minutes last night. Remember, Lowe is also speaking. RBA Governor Lowe is also speaking tonight or tomorrow morning if you're in Australia. I would be a little careful being short the Aussie down here. Interestingly, I got hit on a bid last night in the Asian trade when I was taking a walk with my wife, and I had a bid down here at I think it was at 80, like right around here. It's like I had it just below these lows. I think it was like 82 or something, and it popped back up, and I said, you know what? I don't want to be long. And I actually got out for like 2 or 3 pips. I was walking. I was, you know, around the neighborhood, and I took it off the table, fortunately, because, you know, it continued to slump lower. But now that we've almost closed the gap, you could arguably say that the Aussies closed the gap down here. And like I said, I picked up the Aussie yen this morning just because yields are rallying, bonds are selling off. So as yields rally, bonds sell off. You've got, you know, the yen pairs that are moving up, and I picked up the Aussie yen because, you know, I'm looking at this big inverted head and shoulder pattern. You can see it here, big inverted head and shoulder pattern. What I'm really looking for is, you know, we get a move above 76.25, 76.30, 76.40. You're going to see a much bigger squeeze in the Aussie yen. But I'd rather play it this way than the Aussie cash market at this point, just because, you know, the Aussie did fill the gap, but I don't, the dollar's so damn strong. I don't know if I really want to be on the sell side of the dollar at the moment. So I'd rather just play across like the Aussie yen. But you have to also keep in mind that the Aussie did pretty much fill the gap. We are at 161% extension down here. I would be a little hesitant being on the short side of the Aussie down at these levels. If you shorted this rally the last couple of days, you know, coming out of the weekend, and you saw it gapped up and you're like, oh, you know, post elections, and you're like, oh, I'm going to sell the Aussie. If you sold it, you know, and you were the smart money that sold it yesterday or Sunday night, I would probably be looking to cover down here because we have filled the gap now. And like I said, we're at pretty key fib extension. I don't know if I'd want to be on the short side personally. I mean, you know, I do think ultimately the Aussie's going lower, but, you know, with stocks higher, you know, stocks higher right now, yields are rising, bonds are under pressure. You know, I think, you know, the risk is that you start, you know, consolidating and trying to build some sort of base down here. But anyway, those are my 2 cents. But I do want to pass it over to my colleagues, colleagues, I guess colleagues, because Coach is still here, obviously, and Steve is here. And by the way, we do have some data coming out today, don't we? Oh,
Not
we
really.
don't. Not really.
Not
Yeah, we
really.
don't.
Yeah.
Yeah, we got existing home sales, which is, you know, that hasn't really been moving the market. We haven't seen any housing data really moving the market, but we don't have any data coming out here in a few minutes. But
Except when you sold yours, Blake, it moved the market.
yeah, you know, look, I
It put
actually,
in the top.
if you guys didn't know, I sold my old home, bought my home. It was more of a bought a new home, but it was more of a lateral move. The price of my home, the price of the homes weren't too different. It was more of we were moving because of the neighborhood, and I always look at it as a, well, not really as a wash because I get killed in commissions, but it was really more of a lateral move. It wasn't like I was, you know, stepping up and buying a home that was double the price of what I was in, or it wasn't like downsizing. It was just more of a lateral move into a different neighborhood closer
Glad
to the
that you're
kids'
out of
school.
the projects now, Blake. Are
Yeah,
prices flattening out in Phoenix like they are in San Diego? Do you know?
you know, it's they are. It's still, but things move here. You know,
Yeah.
I think we always have a constant influx of people from, you know,
Winterland.
from California. It's crazy. We have
Oh, California. Yeah, a lot
yeah,
of people leaving because of the expense.
yeah,
Yeah.
you know, they made good money in their California homes, and they buy something cheaper in Phoenix, and on top of that, you know, our
And they're
county
hoping for an earthquake so they have oceanfront.
our county was the fastest growing county in the United States last year, I think in 2018, Maricopa
Wow.
County.
Yeah.
Yeah, it's crazy. We've seen some unsubstantiated growth, and which is the problem is water, which we're going to
Yeah.
face in the next 10 years is because we give so much of our water to California, we're going to have to cut you guys off to survive.
Oh, man.
So
I'll have to drink beer.
you might have, well, so that's made from
Natty.
water too. You might have to drink
Oh,
salt
my
water.
God.
All
Oh,
right.
Imported beer.
Yeah, but anyway, imported beer. There you go. I'm gonna pass it over to Steve.
Unless Trump decides to put any tariffs on it.
Oh yeah, he will. He will. He doesn't drink, so he doesn't care.
All right, guys. Well, hey,
All
good
right.
luck today.
Good hunting, man.
Yeah, and as you mentioned a little bit earlier, Dale, if you guys haven't visited our webinar sponsor, Forest Park FX, you know, if you want to be part of the ForexAnalytix community, like that chat room I showed you a little bit earlier, you can actually be involved by letting some of your trading subsidize your ForexAnalytix subscription by our reimbursement program, or you can get cashback rebates if you're here in the United States. Why not? And plus, those guys are the most genuine people I've met in this business over the last 20 years. They are really just there to help you. They understand if you survive and you make money, it'll help their business survive. So they just want to help you and find the right broker for you. So anyway, visit them. You guys have a great. What's that?
At the very least, they can get some free advice, you know, which never hurts. Yeah.
Yeah, and they were out at the trade show with Steve, who came in from Greece, right, Steve? And then you had Greg, who came in from Slovenia, and then Joe came all the way in from New Jersey. So, but they had their one of their principals come in from Florida, and it was out there, and you know, it's great people to know. So
I heard Joe hitchhiked in his suit.
He might have.
Did you, Joe?
Joe tried to park his soccer vehicle in valet, and they almost laughed him out. All right,
yeah, I bet. Bye, Blake. I bet next time Joe will be joining us in New York, Coach. He's probably going to be hitchhiking, because we actually paid for 3 hours of parking like $65.
For 3 hours?
Yes,
I'm in New York. That's not bad.
Yeah, in the Hilton.
All right. How you doing today, buddy? Is Stella away today?
Yeah, he's coming back tonight. Actually.
Oh, okay.
Yeah. So he'll be with us. Tomorrow he's going to be with us.
Okay, buddy.
Yeah.
So we're getting that little pullback in EG. We talked about it yesterday, Steve. That we can bring the zone, you know.
We had already, there it is, by the way. Keep in mind, we're just breaking through this ascending. You remember we showed this ascending channel yesterday. If you see, we already had some RSI divergence, of course.
Yeah, no, that's 3 drive up there on shorter time.
Not a very reliable one, because when you get divergence in 80 plus levels in the RSI, it's not that reliable. But you said 3 drive, in essence. There it is. You can see it as a little ascending wedge as well. So it was obvious that momentum was, at least in the short term, it was unsustainable. Okay, so we're getting this pullback now. Levels that I would focus on in this pullback are 87.30. 87.30, quite a nice confluence of supports, and below that I would focus on 86.80 to 87. That is also an interesting area. So I do think we can make it there before we can see more buying pressure. Now, since this is currently coming from the pound, let's also have a look at the pound, Coach. The pound, as you see, confluence of supports here. This is a horizontal support area. It is also, if I'm not mistaken, I don't have it here, but if I'm not mistaken, there it is. As you see, the 161.8% extension, also from this rebound higher, was just, a few pips below where we actually found the low so far. Now, is that enough to, get me interested in a rebound? No, it's not, because yes, we are going to see a little rebound here. As you see, we also had RSI divergence here as well, but at very, very low readings. But nobody tells us that this is not just a little, rebound. I mean, even at 128, we might find the resistance and move lower. Now, the areas I would be looking for cable, for this rebound cable, is 8 at 128, 127.90, 128, and then it's 128.65, this previous low, 128.70, somewhere there. So I do think that there is going to be selling interest at this level. So I wouldn't be in essence looking to buy this move. I would probably be looking to sell, at least for the time being. I mean, we don't have more evidence for anything else. As you mentioned earlier, we had been saying it. Gregor has been saying it. I have been saying it as well. There is no real evidence that the dollar does not remain bullish. I mean, the dollar has broken out from this formation. If you also want to see it on the daily chart, here it is on the daily chart. We moved above 97.70 once again. If you remember, I was warning people a couple of weeks ago, don't consider it a given that the break above 97.70 was a false break, because in order for us to categorize that as a false break, we would need to see some kind of a move lower that would, turn us bearish. But we didn't have
Under
something like that.
97, huh, bro? Under 97 would kind of be a signal.
96.75 was the level I had given, to be exact. Yeah, which was this low here. Now we also have this. I mean, there's a strong trend line. You can see it here, this thick purple ascending trend line, which has defined the uptrend since we found a low in the very beginning of 2018. So keep in mind that as long as we stay above this, you have no reason to be bearish. Now, on the other hand, we're now approaching once again this ascending channels resistance. You see this blue ascending channel. So I have to say the following, which also fits Gregor's Elliott wave view. Gregor thinks that this is an ascending wedge, which is in essence defined by this move higher, which is lacking momentum, because we do have an uptrend, but we clearly lack the momentum. So I agree with this. I mean, I would not be selling the dollar currently, but would I actually be buying it? No, I wouldn't be buying it up here. I wouldn't be buying it up here. I would be much more willing to buy it at a deeper pullback. But I do agree with Gregor. This move is lacking momentum, and although the path of least resistance remains higher for the dollar, and we can still keep drifting, this slow drift higher, at the same time, you see the major components of the DXY, the euro, for example. I mean, the euro remains under pressure. It has done so for a long period of time. But really, is there any progress to the downside? No, there isn't any real progress to the downside. I mean, just think about it. We've been in this slow drift lower for a long time. But if you were actually short the Euro USD, you wouldn't have made much money. I mean, you would probably have made more from rollovers than you would have made from the actual movement of the pair. Okay, so I would be careful. I would be careful. Now, in order for me to start looking more enthusiastically for a bigger DXY sell-off, would be a move above like 113 for the Euro USD, and until or unless Euro USD breaks above 113, I really don't have any technical reason to to look for a weaker dollar. Now, if that happens, then I can start considering downside targets. But until that happens, I think you need to remain patient in that. Now, another pair is that, by the way, Coach, are you still here with us? Okay, I'm guessing that's a no. Another pair I'm still monitoring, because it's really stubbornly keeps testing resistance, but on the other hand, it keeps failing to penetrate through, is USD NOK. I mean, USD NOK has spent so much time. In essence, we've been since November 2018 trapped in this 840, 880 range. And as you see, we've been oscillating within this range, but so far it's actually provided for an excellent trading opportunity, range trading opportunity. Okay, But eventually this has to give. Now, I don't know if this is going to be the time that this is going to happen. And from a risk reward perspective, this is an excellent area for somebody to be shorting because once again we're testing this resistance. If you're wrong, you don't have to risk a lot. You're actually risking very little to hope for another move lower towards at least this ascending, because we've been respecting two formations at the same time. One of them is the rectangle between 840 and 880, and the other one is this ascending channel. This ascending channel specifically is even more long term. It actually is in play since the very first days of 2018. So it's like 16, 17 months that this has been going on now. So, at the very least, another rejection from here should make it to retest this ascending channel support, which currently passes from 854 roughly. So I think USD NOK is still something to be in somebody's radar. As you see, we also have a little divergence here between USD NOK and USD SEK. USD SEK, oppositely from USD NOK, has been making progress to the upside. Definitely the momentum is not really strong, but it has been moving higher, having to do with USD SEK. I'm actually watching for a move towards this 161.8% extension at 974 and 975. I want to see what's going to happen from there. I think it's likely that we're going to see some type of a rejection from there. So I'm beginning today by having a look at a few pairs that we haven't, at least not together, we haven't had a look at them in quite a few days. Now, USD CAD remains as boring as possible. It's been, as you see, it's been very, very choppy. It's been coiling after breaking above this symmetrical triangle. It's been coiling in this little range, let's say between 135 and 133.80. So, nothing really to say about it. Keep in mind that all of this is taking place within this ascending channel, which has formed within a longer term ascending channel. So as you see, we are consolidating within a larger consolidation, which is taking place within a larger consolidation. So bottom line, USD CAD has in essence, stopped moving. At some point, obviously, you can expect this. You can expect this trend to resume either to the upside, which you have to respect as long as we're holding this ascending channel. On the other hand, if we actually reverse lower, then I think you should also expect some kind of an acceleration, but we're not there yet. I mean, you have to remain patient. There is nothing to do here until we get some movement again, and it is what it is. So you can keep monitoring it until the pair tells us that it's ready to be traded once again. The situation is not very different at another pair here, which is the USD MXN. I mean, I was trading it. I was very interested in it for a period of time, but since then it has quite down. In essence, we're also trading in a range here between 1873 and 1930. This all is happening within a longer term symmetrical triangle. You can see it here. We've been in this since the very beginning of 2017. So it's almost 2.5 years that we've been trading within this symmetrical triangle. At some point, I'm expecting some kind of, a violent move out of this. Are we there yet? No, we're not. We have this nice confluence of supports at 1870. Only breakup below there would get me really interested to the downside. On the other hand, if we want to move higher, there is still, a lot of breathing space until we can make back to the triangle's resistance. Regardless, current resistance at 1930, as I said before, a break above 1930 can open the door for another move towards 20. So this is the situation with USD MXN, another pair that we hadn't seen in quite some time. There is a reason usually when I don't cover something, it means that it's not really interesting. But on occasion we should have a look at them and see why that's the case. David says Boris is smart. He's smart, but I find him kind of annoying. Hi, is there any audio available? I got audio now. Thanks. Okay, good to hear that it got solved for you. Crude and gold, please. Yep, absolutely. Let's have a look at them.
And Steve, when you have a chance, I just noticed Euro Aussie rallied into the gap that it left. I forgot.
No problem. Let's start from there if that's the case. So okay. So first of all, as you see, another example of the multiple examples that we have, previous resistance, unsurprisingly, acts as support, right? So I see what you mean. We close the gap. Is that a sign to go short? I would be very, very careful, coach, because in essence, what we did is we pulled back, we retested this previous rectangle's resistance as support, and that held. So as long as that's the case, I pay more attention to that as a stronger signal than the fact that we closed the gap. So yeah, if you want to play, if
you could do it with like a 50 pip stop over the high.
Exactly. If you want to trade the fact that we closed the gap, there is one thing going for you. There is a very, very good risk-reward ratio to do so at the moment. But just, even looking at the daily, I would be very, very careful because this 161, 161.20 area was resistance for a long time. We finally broke above it, and voila, it now acts as support. And,
underneath underneath 61, it's vulnerable.
Yeah, it is. It is. But until that happens, I think you need to be careful. At the same time, as you see, Euro Kiwi also maintains, its bullish direction within this channel. Keep in mind, though, we're already in a resistance zone. We also have that spike high at 172. So to be honest, I wouldn't be buying it here. I mean, being so close to 172, I would be a little bit careful. But going short here, unless we break this ascending channel, I don't think that's actually a smart idea. Now, going back to what we were talking about crude, two possibilities here. First of all, this rebound higher in crude doesn't look impulsive to me in any way. So far, what I see here in crude looks to me as a corrective move. So I would expect at least one more leg lower. So that's my assumption. I think that this one, 63.75 confluence of resistances, is quite a strong one. As you see, the pair has trouble breaking through it. So I would be careful here. I think that we might get more weakness from crude, at least towards towards 58. Okay, so I'm still holding part of my position here. I think a chance that we're actually moving down to 58 is likely. Now, gold fooled me last week into closing the remaining of my short position, which wasn't a lot, and going long. I got stopped out on that long position. I had a very, very tight stop, so no big deal. I had already made decent money to the downside. Now it's on its way back to 1265 support area. Who knows? It might hold again as support, but if we do break below 1265, I think there's more downside coming for the gold, and it's as simple as that. The pair that didn't actually break higher falsely is silver. Silver actually never broke out from this wedge. In fact, it seems to be breaking down now, temporarily holding on a daily closing basis at this 78.6% fib. But look how weak it remains. I keep watching this chart and I keep thinking that a retest of this 1390 14 area you see previous area of support is very, very likely. So silver remains under pressure. Gold seems to be as well. Gold silver ratio is doing very well. Platinum getting destroyed after breaking below this 875 level once again.
Was that a new high in the gold silver ratio, Steve? New high for the move?
We did have a new high. Yeah, here it
Okay,
is. Here it
nice.
is. We did have yesterday. Yesterday's peak was a new high, as you see,
Third
right?
drive. Yeah, maybe a
Yeah,
three.
same situation here. We've talked about it.
Yeah.
Definitely, you have to respect this uptrend, but on the other hand, you can't help noticing
Oh, you have
that
extensions there too. That might be nice.
yeah, you have
Yeah.
extensions, but there is no upside momentum. I mean, we keep posting new highs, but every
Hmm.
time we do so, we pull back. So I think that eventually this ratio, this gold-silver ratio, is going to produce a magnificent sorting opportunity, but we're not there yet. Okay, so I think that as always, as always in an uptrend, the most important level to watch is this ascending trend line support, which has been supporting this whole move higher. I think that we have some distance from it, but I think that once we do break below this, we're going to see, some major move in the gold silver ratio to the downside. And once this happens, I think there's going to be a lot of money to be made being short. Now, copper, I know you asked for it yesterday. As you see, the price action still is very bearish. I mean, we're holding this horizontal support area, but price is very heavy. We can't really rebound from this, and this is definitely an ominous sign, a sign that probably we're going to break through this support sooner rather than later. While you're at Euro Aussie, could you have a look at EuroCAD? It's on weekly trend line support. Okay, sure. Let's start by having a look at it on the daily chart, and then we can have a look at it on the weekly. So let me see what kind of a weekly support you're talking about. So first of all, on the daily, I see a little triangle here. I mean, it's quite clear. The fact that we came in this triangle from a move lower tells me that there is a decent chance that there's going to be at least one more leg lower. Now, I can guess. Let's have a look at it on the weekly and see what kind of a trend line you're talking about. Okay, this can't be this one, obviously. So it has to be a shorter term one you're talking about. There is one trend line here, definitely. Let's see. Okay, so you're talking about this trend line. Yeah, okay, we are. We are on a trend line. Yeah, I won't disagree with you, but I would consider this red trend line, quite more important for the trend. This one is a little bit arbitrary, you know what I mean? It doesn't really define the trend because even if we penetrate through this trend line, we don't violate this uptrend that we've had since 2012 because this is defined by the red trend line. Going back to a shorter term, um, time frame, which is a daily in this case, the only two comments I have to make is if you put a gun to my head and I had to trade it in one direction, it would be short if we break below this trend line and this horizontal support area that we're currently testing. But on the other hand, I'm just looking at this price action, and the only thing I want to do with the EuroCAD is stay away from it. I find no reason why I would want to trade it over, other stuff that have much more first of all, they have direction because this has no direction, right? So I see choppiness here, and what I want to do in this case is stay away from it. So my personal advice is, just devote your time and capital somewhere else. My personal point of view. By the way, Euro knock as well. It looks a little bit like the gold silver ratio. You can see it here. I mean, I think this is going to be a magnificent short at some point when we break through this ascending trend line support. And from fundamental reasons as well, I would really want to be long the knock against the euro. I know that Stelios loves the idea, but I only want to do so once we break below this ascending trend line support. Until then, we find ourselves in this ascending wedge, and you need to respect it until it breaks to the downside. Euro MXN as well, since we're looking at all those pairs. We were at this triangle last time we saw it. I said I'm expecting a continuation lower. We did see that. We're now rebounding once again. It remains bearish until it's not. So it's as simple as that. As long as we remain below 22, I think it looks good to the downside. What do I think about palladium? I'm still holding my last third of my position, hoping that it's going to accelerate to the downside once again. I'm deep in the money, so I don't really mind holding here. It's obviously coiling. Now, is it coiling to produce one more leg to the upside from this initial rebound, or is it coiling to resume lower? I can't really be sure about that. I would probably do nothing with it if I wasn't already short and deep in the money. But I have no problem holding to that last 1/3 of my position here, given the current situation. I do think that it can easily produce more downside to complete at least an ABC, if not something more from here. So I still favor the downside, but I don't think there's any risk reward for somebody to be selling here if they have no position already. Our pleasure, Hamid. Why would lose the trade war? Who? You meant who? Who would lose the trade war? US or China? That's an interesting question and a very interesting conversation. I think that China has only to gain from this trade war. I know that it's not a popular opinion, but I always like to look at the big picture. And in my opinion, the big picture is the following. China is, I don't know how many people, of course, the Americans are familiar with this terminology, but I think that the situation between China and the US is the following, very simple. China is vendor financing, I think is the term, the US. So in essence, what China does is it's selling its products to the US by getting in return IOUs, which I have no doubt that those IOUs are never going to be repaid in full. Now, there is the honest way that at some point they're going to be, going through a haircut, and there is the dishonest way that they're going to just lose their value through inflation eventually. But in essence, China is vendor financing the US. And I do think that China has nothing to lose from this trade war. Actually, the US has everything to lose from this trade war. That's my personal opinion. Even the tariffs are being paid at the end of the day by US consumers. So the current growth model, the current economic model of the US is a very unhealthy one, consumption. I don't think it's going to lead anywhere in the long term. It's working for the time being as long as everybody accepts it. So, any way I see it, as I said, in my opinion, in the medium to long term, only the US has to lose from this. Coach, is it time for the interview?
Yes, could be. And
Okay.
Carl Snyder is with us, so I can move ahead if you're through answering questions.
Yeah, absolutely. Anyhow, we're just 1 minute before the top of the hour, so
Okay.
it doesn't make much of a difference.
Thank you, buddy.
Thank you.
Okay, Carl, I'm making you the presenter. Really looking forward to meeting you for the first time. Welcome to FACE. You'll see a drop-down menu where you'll have the audio and have screen share. Hi, Carl.
Hey, Dale, how are you?
Good. What a pleasure to meet you, Carl. It's nice to meet new people and hear their story. Are you going to be sharing your screen?
Unfortunately, I'm having a little bit of technical difficulty here. My apologies for that, but we can definitely talk about some of the technicals and setups within some things that other guests may be looking at, some things that I'm looking at. And I do apologize for that.
Okay, well then what I'll do is when you're talking about something, let me grab the screen then, and I'll, move it around
And I do
based upon
apologize once
what.
again.
That's okay. No, this is live, and
Yep.
we'll just make the adjustments. So before we get to the markets, Carl, I'm always interested, and our viewers are, because everyone has a journey from point A to point B where they are now. Can you tell us a little bit about your first foray into the business? I know you're a chartered market technician. You have the CMT designation. Tell us about what happened prior to you getting involved in the industry and how you did become interested in technical analysis and trading, etc.
Wow, that's a long story, Dale. Sometimes you and I will chat in person. Now I'll give you the very quick.
Give me the cliff notes then. Cliff notes.
Not to sound corny, but as a kid, I was interested in the markets, and my father, he wasn't a big time investor, but he actually told me how to read and look at the stock charts and actually really look at prices within the Wall Street Journal. I was fascinated by it. I always liked, I liked math. And for those of them, the audience who are younger and everything, there is still a print edition of the Wall Street Journal still.
Yeah, I remember. I mean, people couldn't do anything without it in the first thing in the morning, and then a little later on, Investors Business Daily, was a pretty good source too for guys like us that used to update our charts by hand. So, did you used to, before the internet became popular, update your charts manually?
Well, not really. I mean, I wrote, I kept more track at a younger age of stock prices. I wasn't a chart guy just yet. I was just fascinated about the prices, and back then that's when they traded in fractions, of course. And math was always something that I enjoyed. But as I got older, I still kind of followed the markets. Went off to college, and
Where'd you go?
I went to Rutgers University.
Okay.
I'm a Jersey boy. I'm living in Pennsylvania now, but I, grew up in New Jersey, in central New Jersey.
Okay. Do you know Joe Perry? He's also active in CMT.
I'm not personally, but I know who he is.
Okay. All right. Go ahead.
And that's a small community, CMTs. Yeah. If you don't know them personally, you'd know the name as soon as.
Yeah. He's from Jersey too. So
yes,
I mean,
he is.
Yeah. Okay. Go ahead, buddy.
So after my time at Rutgers, I went into the United States Marine Corps. Spent 4 years in the Marine Corps, served, traveled the world. It was one of the most influential times of my life. And when I came home, I wasn't quite sure if I was going to get out. And it was a hard decision, Dale, quite frankly. I struggled with whether or not I was going to stay in or get out up until like the last month of me really EAS, my end of service. And I had, I was still relatively young, so I had grandiose ideas of what I was going to do. And, they never quite turn out the way you're going to be. Not anything bad, but, one thing leads to another. So I came out and did some other jobs not related to the Marine Corps or even finance. But it just so happened that I had met up, after a few years of being out of the Marine Corps, I had met up with an old friend of mine's father-in-law who had been in the industry forever. I remember him, when I grew up. So I had grown up with her and her stepfather, and he just mentioned to me, Carl, why don't you really seriously look at becoming an advisor and getting into the industry? And I said, yeah. I go, it sounds great. And I always had that kind of part that I thought I would want to do that. So after that, I had taken that really seriously, Dale, and I started looking, and this is when you could still look for jobs in the newspaper. And I got a training program from American Express Financial Advisors before it became Ameriprise. It was one time American Express Financial Advisors, and that's how I got my foot in the door, becoming an FA, starting on the retail side of the business.
How do you like cold calling? You're laughing, huh? How many dials a day, buddy?
Oh boy, I mean, if you weren't, you got to make a minimum of at least 200. Really, guys wanted to see 300, 400. It was crazy the amount of time you spent on the phone, and you wanted to call people and tell them about what you could do to help them financially.
Yeah. Like Louis De Palma in Taxi when he became a stockbroker for an episode. If you haven't seen it, you have to pull it up on YouTube. So you found out that really what you were was not a financial advisor, but a salesman collecting assets, correct?
Exactly. And that's not a discredit to anybody in the industry. And I came pretty quick, Dale, realized that I wanted to manage money. I wanted to help people, whether it was on the institutional side or even on the retail side. Or help advisors really know what to do with investing, not just collecting assets and kind of reading a prospectus and thinking. And that's when I said, I started really looking at different avenues, whether it was the CFA, the CMT, all made a lot of sense, but I kept getting drawn more and more. Again, that's the mathematical background to me, to the CMT part, the technicals of how things work, because within fundamentals, it's great and they can tie the two together, but we could belabor why things are happening forever. When you got technicals and price momentum or weakness, it's there for you in black and white. The prices are the prices. Whether you want them to be the prices or not, that's what's going on in the marketplace.
Okay. All right. So a picture speaks 1,000 words, and if you like math, would you say that charting is a lot of geometry?
I think to a certain degree, absolutely. It is to a big degree, and then you have to like the math when you're looking at ratio analysis, going into Fibonacci approach, and those out there who like to really get involved in Elliott wave. Elliott wave is just a whole nother aspect of technical analysis. You can really just devote your whole analysis to Elliott wave, and gentlemen like Bob Prechter have, so that's kind of another way to go.
Okay, let me ask you this: when you were starting to gravitate towards technical analysis, and I don't know exactly the time frame, I've been at it for a decade. So what I'm interested in is what or who did you gravitate towards? Did you have mentors yourself? I know your father introduced you to it. Did you learn from other people before you went to get your CMT? Someone kind of show you the way about what to look for technically? Or for me, I took a course at the Merck CME when I was a runner and cut my teeth on a book called Technical Analysis of Stock Trends by Edwards and McGee. That was very influential. I still use the stuff. It was kind of like the Bible of technical analysis back then. Were there any authors, books, or mentors that kind of showed you the way and opened your eyes to things?
In fact, it wasn't that somebody per se took me underneath their wing. It was more reading the material.
Okay.
Edwards and McGee actually was always the technical analysis Bible, and in my opinion still is. So after reading that and looking to that, I thought that made tremendous amount of sense to me to get involved even more so. I will say that as I got involved more and more, and you become an affiliate member of the CMT, of the Market Technicians Association, that organization is really great, because what I was able to do is just, everybody is so helpful within that organization, Dale, quite frankly. I was asking questions, you have your curriculum, but everybody is so willing to share their knowledge and to help you become the type of analyst that you want to become and try to help you. Nobody is ever really trying to sell you on their dichotomy. At least in my experience, that was never the case. So, I mean, great organization from many facets, because
what a testimonial for CMT. Yeah, really, you could be a spokesperson for it. So you met people while you were getting involved in the course.
Correct.
That they were just open and sharing and giving, and that is pretty cool in our industry. I know a lot of people believe in paying it forward to people that are new and help them avoid stepping on the landmines that they have. So any people in particular that were influential to you in CMT at that time that we might know?
Well, somebody that you'll definitely know, and he wasn't my mentor, but somebody that I followed in the news and really enjoyed following and listened to a lot was Ralph Alcampora.
Okay, yeah.
Yeah, I mean,
Yeah.
I have met him at some of the CMT symposiums.
Okay.
But I had always, like, if there was anything he was writing, anything that he was talking about, I would go and look at it because I liked the way that he approached things. This is very practical.
Yeah.
Instead of trying for people, sometimes we can get lost in the analysis or paralysis through analysis, as a lot of technicians or any analyst would say. But the way that he was able to put things in very straightforward, matter-of-fact ways, and also a well-known name in the technical analysis industry, and I'm not sure if a lot of others, but Luis Yamada was and is.
Yeah.
Fantastic. So these are people that have been doing it forever. So that's why, and they're not people who are like writing books and just saying, oh, they've got skin in the game. They're doing it. They're working for companies. They're doing the research. So I would say those two individuals were people that I always wanted to read their information or just see what they were saying in their interviews, etc.
All right, you know what detractors of Ralph used to call him?
What's that?
Ralph, I could make you poorer. Ever hear that one? Huh?
You know, honestly, I never have. I never have.
Anyway, so, you know, no matter how good you are, everyone has periods where things aren't working out. And, you know, anyway, that's what I heard. Ralph, I could make you poorer. So anyway, Luis Yamada, known for the longer the base, the bigger the launch into space. So, you know, like kind of like bottoming saucer formations and things like that. So, okay, buddy. Why don't we get to the markets? What instruments and what type of investing or trading do you do?
Well, I'm a big user of ETFs, and then if I want to get involved,
I love ETFs. So do you trade Spider or you trade TBT, TLT for bonds, and you know what looks good to you in here?
Well, the U.S. dollar, I've liked and always followed that, and
UUP.
Yes, absolutely. That's the particular one I like to trade if and when I'm going to be involved in it. And you know, you're obviously, it's not a pairs trade when you're getting involved in something of this. You're taking an approach really, you know, inherently when you're doing Forex, you're taking a dual side trade, a long and a short. The way I like the dollar trade and the way I like it, it's a basket of other currencies against that dollar. So
you don't throw market orders in on this, do you? Because I mean, look at it. I'm looking at a 1 hour. If you could see my screen on
yes, UUP. I sure can.
And it looks like you have to make an appointment to get a trade off in UUP. So do you go in with limit orders? Because if you throw in a market order, the spread could be. I mean, what's the spread on an ETF like this?
You know, you can, and that's why you want to use your market, your limit orders when you're entering into the marketplace. You've got to be careful with some of these particular instruments. Even though I do like the ETFs, some of them do, like you said, trade by appointment, and you have to be a little bit more careful when you're trading those instruments. So yes, limit orders are definitely things that you're going to have to be using, and is what I use. And if I miss a trade because I'm not in where I want to be, I'm okay with that.
Next. Yeah. All right. So I'm assuming you're constructive the dollar. Is there what are your technical reasons at this point for liking it? I'm starting to see some divergence. I know that it's a very sentiment-wise really stacked up on the bullish side. Hard to find a dollar bear anywhere. What are you thinking in here, levels wise and so forth?
Sure. So actually,
I'll put up the weekly for you, Carl.
yeah, if you could, I was going to say that it might be a better point here. So looking at this 2650 area here, looks like an interesting spot. And, you know, some people will mark these down. Obviously in Forex, you're trading with BIPs, but if you're looking at an ETF, it's a little bit different of an animal, even though they're reflective of the price. You gotta use a little bit more of a range within your price metrics. So it just seems that this 2650 area is a place of interest. And I like using the weekly. It depends again on your time frame, and you're going to hear that a lot. So I think ETF traders are a little bit different than the ones who are going to go straight and actually trade the currencies themselves. I think currency trading, you're going to do a lot shorter term. Not that you can't do shorter term with the ETFs, but you have the opportunity, I believe, to take a more of a longer term view, whether that means days or weeks or even a month. But as you can see how the dollar really bottomed out there in 2018. But to stay constructive though, Dale, we really want to see above 26 on the charts here on the weekly. We want to see 26. So I think we have this range of 26.50, 26, even though we had been above that in the late part of 2016, early 2017. So you're going back a ways. But I think 26.50 is really the area that needs to be broken out. So even though I am bullish on it, I think at the same time, you definitely want to, you don't want to get overly aggressive here. You really want to wait for the breakout. I'm big in not anticipating the breakout. I like to trade the breakouts. That's one of the things that I've always felt comfortable with.
That's a pearl.
Yeah.
Because you know how many times in my career I've anticipated one and then it doesn't happen, but I would go in and, you know, a lot of traders or swing traders, position traders, listen to what Carl's saying because you try and get a little bit of an edge going into it and you don't know if you have a breakout till the candle or the bar closes. So yeah, I've learned the hard way to, you know, wait for things to confirm, although I still enter things because I like to hear the ice crack, sometimes anticipating them. But so 2650, if we say we rally to 2650 and can't maintain it and close back under 26, what ETF would you be looking at to possibly take advantage of, you know, maybe a intermediate term correction?
You would definitely want to get the whatever your flavor might be for the inverse dollar ETF, whichever one you would prefer.
Okay. All right. Okay, so we have the dollar. You're constructive. You're waiting for a breakout over 2650. What would be your target should we get the 2650 breakout?
You know, not to get too crazy here, but I think we could see a good. Quite frankly, I think we could see a good couple of 3 points, maybe behind that. I don't know if we'll get to 30. That's kind of a really gigantic move. And if you look at it, we've only been there. Yeah, but I think we could take out all those candles. If you're looking here at the monthly, I think we take out those. If we can sustain that 2650 and really get the push behind it, I think we get to 27. Obviously, you know, we're talking small, but I think we can get a good run, and momentum would push this up to around 28 and 28.50 are levels that I think are definitely within reason. And, you know, that's always a big move to say, but I think that being that these are such levels that have been tested and really haven't been able to break through, I think that we can look at those higher levels.
You know. So is it all based technical, your view on the dollar, or there's some fundamentals to back up your chart points that you believe in here on the dollar?
Sure. You know, I mean, as a technical analyst, you hate to kind of, technically that's what I see, but as far as pragmatic, I mean, a lot of people knock the U.S. saying that, you know, it's overheated or this and that, et cetera. I was recently at a conference a couple of weeks ago, and they were just talking about developed markets, emerging markets, and some of these markets, even though they've had their rallies back and forth, have never gotten back to their 2007 highs, and their
Yeah.
currencies have not done that well. I just think overall that the U.S. is the best economy right now. I think the fundamentals do stand behind it. I'm not saying everything is great. And in fact, it's actually better, Dale, when everything isn't great, because when everything is great and nothing can get better, that's usually the end of any move, whether it's a dollar move, whether it's an economic move, because everybody's in the pool, nothing can get better, and you basically have run the course. So,
Okay.
and that's one of the things that
I know
would
you're
say.
a technician. Does the Fed come into play when you think about the dollar? And do you think that the Fed, the way the market's pricing it, they went from tightening to being on hold, and they say they're data dependent, and now the market is thinking they might even ease in September. Do you think the Fed is really data dependent or S&P dependent, like Peter Bookvar says?
Huh. You know, I definitely think, because they're economists, they love the data, but I think they've become more reliant on what the markets are saying. That's me personally.
Yeah.
I think you started to see a little bit of that with Greenspan, and that shift starting to happen with Greenspan, but then definitely with Bernanke, it did occur, and now with Powell, I do believe, and everybody could say no. I think they are always looking at the economical data, but the good thing is the markets are a good forecaster of what the economy is going to do for the most part, and therefore they're going to be looking at what the markets are doing. I think, they're not going to knee-jerk react, but I think they do look at what the overall broad-based market is doing, vis-a-vis the S&P 500.
All right, let's look at the overall market. So, I think the Fed would switch gears if we took out the December, January low. What's your view, since really the beginning of late last year, we really haven't gone anywhere. We've made marginal new highs in the indexes. What are you thinking in here? Is it right to sit long with this market, pare down, get defensive, or what sectors are you in favor of looking to buy on maybe weakness, correction, or something?
Sure, and Dale, if it wouldn't be too much to ask, if you want to just pull out the weekly here, just so we can take a look at it.
Sure.
And
I like that you use telescopes and not just microscopes. So, okay, there you go. Would you like the NAS or the S&P or the Dow?
Let's use the S&P. It's a broad base. Right. I mean, I think it's the most relevant, quite frankly.
Okay.
And yes, like you said, we made marginal highs. We had that huge sell-off at the end of last year. And quite frankly, technically speaking, it looked like everything was broken, and it did. And I was quite surprised that we didn't fall a lot farther than we did. And I thought we might have a hard time getting above that 2,600 level again.
Yeah.
And we pretty much didn't. We pretty much just went right back through it.
Yeah.
And have continued.
Kind of an unusual recovery without any kind of correction along the way up. I know I tried shorting it at 61.8 back and 78.6 back. I'm still holding stuff underwater. What do you think now?
I think I'm optimistic. I am not overly aggressive. Like, I wouldn't definitely be margining it out. And if you have some big time winners, I wouldn't necessarily say sell them out. But if you're looking at individual names, you could keep your stop losses in if you want. We can debate that up and down, but just because you're up big in something doesn't mean that you have to sell it all. Or
yeah. Are you a proponent of taking partials?
I am, yes. So it really depends upon how much skin in the game or how much exposure you have. So if your exposure, if you're a big time S&P guy, if you're buying the SPYs or what have you, and that's a large portion of your portfolio, or that's a large portion of the trading you do is behind the SPY, and you're up big like this, yeah, you want to pare some back. So it really depends on the type of investor. But just because something's run so much doesn't mean it can't keep going. It means it needs time to kind of really catch its breath a little bit.
All right, now sound like a technician, okay? Well, the CNBC analysis, if it goes up, it could continue unless it sells off and holds support. If support's taken out, it'll go down unless it rebounds and heads to new highs. So, you ever hear that kind of analysis? All right, so
absolutely.
Yeah, that's basically I'm strongly neutral. So with the S&Ps here, do you have any price levels like you had in the dollar for upside targets in the S&Ps? 3,000, is that? That's not far away.
No, I don't think that's too far away, quite frankly. I think if we can break out here and make newer highs, I think you got a pretty good stretch. I think we go another at least 10, maybe 20% higher before we see anything meaningful, quite frankly. I know that's a very, very bold call, but it's a call that I feel comfortable saying. Again, I'm not going to hold back. That's what I think on the S&Ps. If we could take out that make new highs and kind of get close, psychologically 3,000 is a level, but we just need to make new highs. 3,000 may play a little bit part of going back and forth. But if you break 3,000 in that area, just use that. I'm not going to be surprised for us to be, trading.
What you can tell people if we take out last week's low at 2,800?
We take out. I think that the main thing that you want to keep looking at is you want to then probably really not look much further, but longer term view, I would be more in the range of 2,750, 2,700 are the areas. I think you have to be very nimble to short this market. And the reason I say that, it seems like every time that this market, since 2009, the big recovery, anytime there was definitely money there was money to be made being short, but you have to really know what you're doing to short stocks, because your upside is capped and your downside.
There's ETFs though. There's bearish ETFs, right?
Correct. So it's depending. So I was kind of leaning a little bit more. I know that sometimes people want to with the SPYs, they just want to go out there and they just want to go short. But if you want to use the ETFs and do so, if you want to try to put on a trade after that 2,800 area, by all means you can definitely do that. But just know the type of risk that you're taking. So there is a better way to do it. Yes, Dale, absolutely. So if you're not going to go out and short the SPY or even get in the futures market, you can buy some of these bearish ETFs and look for a trade there, which is definitely a lot safer as opposed to going out and shorting either futures or shorting the SPY.
Okay. All right. Why don't we transition over to, do you think it's a waste of money to buy insurance? Here's the VIX.
Everybody always talks about, I think it's a waste of money to try to trade the ETFs, the VIX ETFs. I think unless you're in it.
No, I understand that. There's big attrition on them. I know I've lost thousands doing it. So, as far as insurance, I mean, you have fire insurance on your house, right, Carl?
Oh, absolutely.
All right. Now you hope that you don't need it.
Right.
Is that a waste of money?
I think it has been. I think it has been in the markets to have insurance.
Well, it has been. And so is fire insurance until you have a fire.
Exactly. Okay. I'm more of the mind that I'd rather get out of the market or portion out or piece out of the market as opposed to
carry insurance all the time.
My portfolio.
Okay, so Carl, I have your Twitter up here. I see that you have like no website. What's it? Do you have a business model, or you're just trading your own account? What is it that you do, and why are you on social media?
Sure.
Go ahead.
So in the background, I've kind of transitioned down. I'm trading basically my own money these days. I used to work as a market strategist at many RIAs. But in the background there, Dale, and I'm going to get the site up on there, VETS Index is something near and dear to my heart. It's an index created based on all the companies that are doing great job hiring veterans. As a Marine Corps veteran, it's near and dear to my heart. So that card that you see in the background, everybody, that's part of the GT series. One of our principals has that card. He was gracious enough to put our logo up there on the card, the Vets Indexes. So I don't want everybody thinking the Vets Indexes isn't making all that tons of money right now. Hopefully, eventually we did. So I'm not really, right now, I love the markets. I trade the markets, have an affinity, always will try to help people in the markets. But what I'm doing now is totally different, Dale, as far as professionally. I'm with Vets Indexes. We'll get that site up, but if anyone wants to take a look, it's vetsindexes.com.
What a great cause, Carl. You know, this is the best part of the interview. Save the best for last. I love people that have a mission. What a great mission. You know, Blake Morrow was in the Marines too. You ought to say hello to he did some tours, and you know, I still, Carl, am in awe of the courage and the sacrifice of not just the vets but their families and what they go through, and how they really don't get the treatment they deserve at the VA. And I'm in awe because, you know what, when I was at Northern Illinois University during the Vietnam era, I was so happy I had a high lottery number. Okay, so when I watch things like Band of Brothers and all of that, it's just unbelievable to me what guys like you, the commitment that you have to lay everything on the line for a country that at many times doesn't even appreciate what you do. So congratulations. I think this is your best trade, my trading warrior brother, right here.
Dale, that was gracious, and I'm very humbled by what you just said. So thank you.
So if I could ever help on Twitter by spreading the word about what you're doing, you just let me know and I'll promo it for you, buddy. And really great meeting you. And I hope you can help as many vets as possible make the adjustment to normal life. Like a lot of World War II guys never had any help and they just didn't talk about it. And then things pop up 40, 50 years later. So I love your cause, and anything that I could do to help you on social media, you just let me know. I'm there.
No, I truly appreciate it, Dale. That was gracious. And no, thank you for having me on today, especially since I'm really not in the game in a sense where I'm managing client money. I'm still managing my money. I'm still in the market. But I think that what you did here for me right now by just bringing up the whole Vets Indexes thing was fantastic. And I can't thank you enough.
All right, buddy. I'm so glad that we met, Carl, and keep in touch. And it's not just talk. I will take the action if I can help you. All right, buddy. And like it or not, you're my trading warrior brother now.
Absolutely, absolutely.
All
Dale, it's fantastic being on with you. Thank you,
Carl. Great meeting you, and may your cause bring peace and support and joy to all the guys that made all the sacrifices while we're here worrying about making pips.
Thank you. Thank you very much.
All right, Carl. Everyone, that's a wrap. That's a wrap for Turnaround Tuesday. Good hunting the rest of the day. Join Blake and the guys in private chat. Remember, don't just count your pips, count your blessings. Support guys like Carl that are helping the people that came back with both emotional, mental, and physical injuries to get on with their lives. And we'll see everyone tomorrow. Adios, and thanks again, Carl.